Hey guys, it's Boris. Welcome to the crosses section for Aug 8 to Aug 12, 2016. And of course, this week is really all about the Kiwi. We have two particular Kiwi cross trades that I think are interesting to take a look at. The one is, of course, very natural, Aussie Kiwi, and the other one, sort of a secondary trade that I think is interesting, is Euro Kiwi. But it's really going to be around that because, again, I think the announcement by the RBNZ, although it's expected, is going to have a secondary push. If they communicate they're going to cut more, or if they surprise with a 50 basis point cut, the kind of continuation in that move is going to be a multi-day continuation. So I think it's really worth trying to trade that on a basis. The other cross idea that I have this week is actually sort of a mild carry trade, which is the recovery of the yen. Move. So if we sort of bet on the idea that yen goes up to the 103s this week because data on the US side is pretty good, the best offset against that on a cross base, I think, is still the Aussie. And we'll take a look at the charts because I think both of the charts really confirm a very nice rounded bottom. So here are the levels that I think we're going to be looking at. The support, Aussie Kiwi 104.50, resistance 107.50, and I think the critical thing here is the breakout beyond this resistance, because if we take this out, we could be on our way towards 108.50, possibly even 109.50. In other words, longer term resist points close to the 110s could be back in play. The critical thing, I think, in many ways, is not just to drive the Kiwi lower against the dollar, but to drive the Kiwi lower against the Aussie, and I think that's what the RBNZ wants to take into play. In the meantime, the softer secondary trade is the Euro Kiwi to the long side. I'll show it to you again on the charts why I kind of like that. It's not that I love the Euro, but I don't think Euro is really going much anywhere. And even if the Euro has any kind of a mild bounce against the buck, it will do well on a Euro Kiwi basis. And then last but not least, of course, is the Aussie yen, for the reasons that I just stated, which is the idea that if dollar yen starts to kind of pick up any kind of juice, the Aussie will stay stationary, and that will give us an interesting trade to the upside. Let's just take a look at the charts here, because the charts really tell the story in a very, very clean fashion. So here's the Aussie Kiwi, the first Kiwi trade for the week. 104.50 is the spike low. Yes, that's the big support. I really don't anticipate that even getting close. I think the best you're going to be able to get here is maybe 106, maybe 105.50 before the RBNC decision on Wednesday, and if which I guess is Thursday to you guys. It's Wednesday to us. It's Thursday to Australia and New Zealand. If you can buy the dip here, on the assumption that they're going to be dovish, this probably takes a spike out, certainly towards the 107s, and the 107.50 is the big resist point here. If it's a truly dovish statement, it has a chance really to kind of power on all the way out to 108.50 to the upside. So that, I think, is an interesting trade as we go forward. Now, the next Kiwi trade is the Euro Kiwi, and you can see this in the, oops, sorry, I pulled the wrong one. You can see in the charts here at how nicely it's setting up, actually. You see, so we had a move to the 58s, a drift back down towards the 54s over here, and it's really setting up nicely. Last Friday, a nice little candle here, a nice wick to the to the top side, suggesting that we have a potential here move towards the 56s, and ultimately a breakout that will be capped by the 158s. So again, anywhere you can buy this below the 55s with a stop underneath the 54s, probably going to be a pretty decent trade here. Assuming that the Euro stays relatively stationary until the RBNZ, and then it's going to shoot up on any kind of RBNZ announcement that is going to be weak. And then last but not least, here's the Aussie yen trade, which I kind of like as well. What's interesting about the Aussie yen is, we talked about the triple higher low bottom in dollar yen. It's of course much more pronounced than the Aussie yen here. You have the Brexit low. You have the secondary high at 74.50, right? This is 72.50, 74.50. Now you have the low here at 76.50, considerably better than the 74.50 low, and a nice gentle rounded turn here. I like this trade. I like the trade with the stop below the 76.50 with a target possibly 78.50, maybe even 79 as the week progresses. Again, it's just a pure dollar yen recovery carry trade. And I think the Aussie is the best currency to express that with, because of course it's the only one that's left that isn't going to be mangled by further interest rate policy declines. So overall, I think those are the key trades on the cross side. I like the Euro Kiwi. I like the Aussie Kiwi. The Aussie Kiwi is certainly the most obvious trade. The less obvious trade is the Euro Kiwi here, and it does probably provide you with better positioning is simply because you're very close to the bottom here, so you could get much better risk reward ratios by positioning yourself around here. And generally, that's going to be the story. We're going to be watching the RBNZ as they are going to be the primary central bank event for the week. I wish you guys the best of luck, the best of trading. Hopefully next week I'll feel a lot better and I won't sound like a frog, and we'll be able to mix it up as we always do. Boris Schlossberg, over and out.